If you really, really, really want to increase your Navy Federal internal score, then this show is for you because I'll be spilling a lot of beans. I'll be talking to you about the latest hacks that are increasing members' scores like crazy. Don't you go anywhere. You're going to love today's conversation, I guarantee it.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flow with a stinging kind of beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Story Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee, or tea, or vodka. Now let's roll. In today's conversation, I want to talk to you about Navy Federal internal score. Here are the latest hacks that are increasing NFCU members' scores like crazy. Before I even start anything, I just want to tell you right now that your Navy Fed internal score is a real thing. It is a permanent thing. Don't you let anybody trying to tell you, hey, listen, this is just a one-time thing. You know, they just have it for, no. Hey. I'm telling you, and my team, we have been members of this institution for more than 30 years. We are telling you right now that your Navy Federal internal score is a real thing. It is a permanent thing. So the first hack that you want to really pay attention to is your credit mix. Okay, you know, the funny thing is some people just like, I'm just a one credit product person. I just love credit cards. That's it. I don't want loans. I don't want revolving lines of credit. I don't understand none of that. Hey, listen, hey, you want to diversify your credit. If you want to increase your Navy Federal internal score, you need to diversify your credit. Try to have a loan. If you don't need the money, just try to get a Navy Fed pledged loan. In other words, you're trying to introduce diversity in your credit. Okay? Don't you be like a one-ass kind of credit person. Son, I'm talking to you. Hey, daughter. My daughter, I'm talking to you. I want you to really diversify. So when we talk about diversifying your credit, you want to have what? You want to have installment loans. You want to have revolving debts, right? You can have a credit card. You can have a line of credit. You can have a personal loan. If you have a student loan, that's fine too. Okay. I'm not asking you to actually get in debt just for the sake of getting in debt. I'm just saying that you need to have a diversity in your credit. Navy Fed pays attention to that. They will make sure that you actually, because one thing you need to understand, even your credit mix accounts for 10% of your FICO score. So it is something. It is not like a minor thing. It is important also, okay? So this question is I'm actually speaking right now through this hack. I'm speaking to a question that was submitted to us by Carrie Turner. Carrie, you are in New Mexico. You wanted to ask more. You want to have more information about the relationship between your credit mix and your Navy Fed internal score. There is a strong correlation. The second thing is your CUR. I know a lot of people like, you just talk about the same thing all the time or whatever. Hey, we did not invent the Navy Fed internal score. I'm just telling you that your credit utilization ratio is important when it comes to your Navy Fed internal score. It is what it is. You got to accept it. It is logic. Cause and effect. So Navy Fed is looking at your ass and looking at the CUR that your ass is carrying. If you are having a CUR, let's say your credit utilization ratio on your open credit cards. Here, I'm not just talking about your Navy Fed credit cards. I'm speaking about all your credit cards. If you are maintaining a CUR above 30% or 35%, you are in quote unquote dangerous territory. So what I want to do right now, I want you to hit the road jack. I want you to leave that territory and come back to below 20%, below 25%. That's where the juice is really at. Okay, so when we speak about credit utilization ratio, we want to be in a situation where we are living within our means. That's what it is. If you have a high credit utilization ratio, that just means that you are keeping higher balances on your credit cards. So what that means, that means that you are living beyond your means because you're not able to pay off your balances every month. That's the truth. I don't care if you hit my ass because I'm saying, but that's the truth. And because I want you to win, I want you to win. I want you to have a high Navy Fed internal score. That's why I don't care if you are throwing Tabasco sauce, Tabasco sauce on my face, hot sauce. I love Tabasco anyway. The point I'm trying to make here is what? I'm trying to make sure that you want to cut on the happy hours on Thursday. You want to cut on the restaurant, on the dinner, on the dinners on a Friday night. Cook at home. Reduce your spending. Bring your CUR down. Boss, I'm talking about things that really matter to you, okay? And you want to set up an automatic balance alerts. You want to pay your bill twice a month. A lot of folks they just went for the 28th of the month. Yeah, I'm just going to pay my credit card bill once a month. No, pay twice a month, pay 3 times a month, so that whenever your credit card issuer reports your data to the credit bureaus, you will be in a better situation anyway. The more often you pay off your credit card, the better. That's just a fact. Okay, so this is important, and this question is important, and I wanted to sort of link this hack to a question that Jennifer Cook out of Mesa, Arizona asked. So Jennifer, you are a laser operator. Wow, this is a pretty interesting job, laser operator. Well, I hope you're making a lot of cash with that job. I think you are. So you asked a question about your credit utilization ratio. Yes, your credit utilization ratio has a direct correlation with your Navy Fed internal score. Yes, it does. So the lower it is, so the lower your credit utilization ratio, the higher your Navy Fed internal score. So there is an inverse correlation. There's an inverse relationship between your credit utilization ratio and your Navy Fed internal score. Third thing, very important hack. Son, daughter, are you there? Listen to me right now. You're just taking notes. I want you to take notes. You have to take notes. Let's talk about inquiries. Are you one of those people who just applies for credit all the time? What's up with it? If you're applying for a credit card, don't you listen to those people? Are just people telling you if you apply for multiple credit cards within a day, this will only affect your credit score once. Don't you listen to that big ass lie? It's a big ass lie. If you apply for multiple credit cards within a day, your credit score will be affected multiple times. It's a fact. Don't try to dispute it. Don't try to listen to people telling you stories, Disney stories on YouTube and whatnot. No. If you apply for a mortgage, if you are looking for a mortgage or you're looking for a car loan and you apply for multiple lenders, that's a different situation. But if you apply for a credit card, a revolving line of credit, you apply for 5 credit cards within a day, your credit score can go down by 50 points. Don't you try to dispute that. It is a fact. Okay, so what I'm trying to say here is you want to be in a situation where you reduce your inquiries. Why are you having too many inquiries on your credit report in the first place? I'm talking to you, son. Hey, over here. Why are you applying for so many credit cards? Daughter, talk to me, answer me. Why? Is it because you don't have a job? Is it because your finances are sort of in some sort of situation? Are you in dire situation financially speaking? If there is the case, then there are other ways to actually solve that problem. So you really want to reduce your inquiries, and you can have soft inquiries, not a problem. If you have soft credit inquiries, that's not a problem because soft pulls do not affect your credit score. What does affect your credit score is those hard pulls. Okay, those hard pulls are really bad for you. So Mrs. Kaylee Kirby out of St. Louis, Missouri. I'm actually talking to you right now. You want to reduce your inquiries. I don't care why. I don't even know why you're applying for too many credits all the time like this. You got to stop that. You have to stop that. Okay? You have to plan your applications. If you need a credit card for cashback, do some research. Listen to shows like this. Go online and read about the subject before applying for credit cards. Don't you apply for 3 or 4 cashback credit cards on the same day and hope that you will be only having a one hard pull. That's not true. Don't do that. Number 4, let's talk about your credit age. So when we talk about when we are trying to increase your Navy Federal internal score, Remember, the Navy Federal internal score goes from 100 to 450, right? So the point I'm trying to make here is that your credit age plays an important role in your Navy Federal internal score. Now, there's nothing you can do about your credit age. It's like, if you're 20 years old, you're 20 years old. If you are 30 years old, you're 30 years old. If you're 60 years old, you're 60 years old. If you're 70, that's what it is. It is what it is. But one thing you can do is just to understand the situation and be patient. See, the thing here is that a lot of folks they're just so impatient. They think they deserve, I deserve this. I'm a Navy Fed member, and I deserve to have a high FICO, Navy Fed internal score. No, wait a minute. Hold your horses. Hold your horses. Boy. If you're 20 years old, it takes time. You're not going to have a high Navy Fed internal score. That's just a fact. Okay? Accept it. If you're 35 years old, that's a different situation. That means that you want to make sure your credit history is lengthy enough to have a positive impact on your Navy Fed internal score. So if you have limited credit experience, just focus on your payment history. That's all. That's one of the most important credit factors. Okay, you want to make sure that you have a positive payment history, so that when the data furnishers, when the credit card issuers, when the lenders report your information to the credit bureaus, they do not report late payments. That's all you can do. In your situation right now, that's all you can do. But one thing I want you to really understand here is that when we talk about payment history, we're not just talking about making payments like making the minimum payments every month. We're speaking about making sure that you are increasing the amount that you are paying. Ideally, you want to be in a situation where whatever you charge on the card, whatever you charge on the credit card, every month you pay it off. In other words, your credit utilization ratio should be 0 or near 0. That's where the sweet spot should be at. Okay, so this is important to have, and we are actually answering a question that Jose Carrillo actually asked. So Jose, you are, people have pretty interesting jobs. I've never heard this. You are a simulations specialist. I don't know what that is. Simulations specialist. Okay. And you are actually calling from North Hempstead, New York. So if you want to actually increase your Navy Fed internal score, just make sure that you just stay patient. So as your credit history ages, as your length of credit experience ages, you are going to have a high Navy Fed internal score. It just takes time. It is what it is. So don't you try to actually do anything. You are perfect. Right now things are good for you. Things are perfect for you. Just wait. Okay? Just wait. Another important factors that actually impact your Navy Federal internal score, especially if you are trying to increase it like crazy, recent accounts. Don't you try to open accounts all the time, because Navy Fed will actually penalize you, quote unquote, penalize you with a lower internal score if you have a high ratio of accounts open in the last 24 months relative to all accounts. In other words, you have a situation where you are constantly applying for and getting approved for credit, because this signals to Navy Fed that you, quote unquote, have a problem. You have a financial problem. You are desperate. So, boss, are you in that situation? So, what's really happening? Talk to me about that. What's really happening? What's causing that? Why are you always applying for it? Please talk to me. Good Lord of my ancestors, have mercy. Why are you applying for credit so often and so much? Why? Talk to me. And don't you try to tell me, I apply for this loan or I apply for this credit card because I want to have a vacation in Bali. I was trying to take advantage of the rewards on that credit card, and so I went to Indonesia and chill with my family. Don't you tell me that, because this will not be a good reason. You actually, if you get a credit card, you get it for not only the travel rewards, but also to make sure that you are building credit. You are maintaining a high credit. Okay, so remember, it's important to make sure that you have a low ratio of accounts open in the last 24 months to all accounts if you are trying to increase your Navy Federal internal score. Okay, and hey, listen, Steven Nelson, right? You are a memory surgeon. That's a good job, and you are actually sending us an email from what? Hialeah, Florida. So hey, listen, Steven Nelson, if you are trying to boost your Navy Fed internal score, you gotta really reduce the number of times you open accounts. Okay, what we talk about on this show is to plan credit. See, credit is a game, and we've said this before. People always talk about, hey, listen, you repeat the same thing all the time, blah, 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 blah. Hey, listen, if I repeat certain things, it's because those things are important. Those things are important. And we are trying to educate the masses here. We're trying to instill a sense of urgency, a sense of discipline, a sense of routine, a sense of knowledge. How do you get knowledge if you don't repeat things? Repetition is the father or mother of learning. Okay, so make sure that you reduce the number of accounts that you have. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweaty Kiwi Show. We are still talking about your Navy Federal internal score, and here are the latest hacks that are boosting members' scores like crazy. The next thing I want to talk about is your debt-to-income ratio. Oh yeah, debt-to-income ratio is so important. I mean, listen, your debt-to-income ratio is not going to change simply because you want it to change. So what I'm trying to say is, if you're a couch potato right now listening to me, and you're just chilling, you just watching whatever you're watching right now, and you just hope that your DTI will go down, it ain't going down. It ain't going down. It ain't going down. It takes time. It takes effort. It takes an active commitment to bringing this bad boy down. All right? And there are a lot of things you can do. I mean, if you, again, remember, there is an inverse relationship. There is a negative relationship between your DTI ratio and your Navy Fed internal score. Meaning, when you have a low DTI, you have a high Navy Fed internal score, and vice versa. So when we talk about DTI, what are we talking about? We are speaking about how this is basically a measurement of your debts relative to your income. In other words, how much of your income goes towards paying off debt every month. And when we talk about income, we are speaking about gross income. So son, daughter, if you're listening to me right now, I want you to pay attention to your DTI. So what is a good DTI anyway? What is a good debt to income ratio? Anything less than 30% is great. If you have 20%, 10%, that's even better. But the question is not the number itself. It's basically what caused that number to be what it is in the first place. What I'm trying to say is, if your DTI is 30%, if your DTI is 35%, grandma, if your DTI is 50%, what caused that DTI to be 50% in the first place? We got to go back to the root cause and analyze what really happens here. Okay? It's not about I'm just sick, I'm sick, I'm tired, whatever. No, it's about what is making me sick and tired. So you want to be in a situation where you constantly check on that. Okay, this is important. And John Edwards from New York. Yeah, where you at in New York? Okay, you are in Queens. Beautiful. Okay, so what I'm trying to, so really, you're asking the question about the DTI. DTI has a strong direct correlation to your Navy Fed internal score. So you want to be in a situation where you are constantly reducing your DTI. The last hack that I want to mention to you is your net worth. You might be thinking, oh, what is he talking about? My net worth, how much I have, and my Navy Fed internal score. Well, it's not just net worth in general. It's your net worth that you are keeping a Navy Fed. You are keeping a Navy Fed's account. The money that you are keeping with Navy Fed, that's what's going to actually be very important. And we want to address the general conversation about your NPR, your relationship banking with Navy Fed. See, people are thinking when we talk about Navy Fed internal score, they just think that, hey, listen, the only important element here is credit. Yes, credit is important to actually give you a high Navy Fed internal score, but so is your level of deposits kept at Navy Fed. One thing for sure, you need to make sure you have direct deposit. You got to have direct deposit. You want to give Navy Fed a piece of the juice, a piece of the pie. They need to actually get your cash. They need to manage your cash for you. Remember, Navy Fed is lending, is issuing credit cards with what? People's deposits, among other things. Okay, so you want to have a situation where you have positive net worth. Actually, when we talk about net worth, it's not just about your direct deposits. Net worth, really, the definition is total assets minus total liabilities. So basically, you are withdrawing, you are actually deducting your total debts from your total assets. Assets are what you own, and liabilities are what you owe. Very simply here. So when we talk about assets, we are speaking about cash in the bank, including checking and savings account, investment account balances, your home equity, okay, the current price you could get from selling out your car, and valuable items you own like collectibles, artwork, or jewelry. And your liabilities can be any balance owed on the personal loans, your credit card balances, the unpaid balance on your home mortgages, outstanding student loans or car loans, other obligations such as alimony or child support. So you can see here is that, so if you want to calculate net worth, again, I just gave you the formula. You just have to do total assets minus total liabilities. But the bigger point I'm trying to make here is that is the importance of having a strong multi-product relationship with Navy Fed. See, when you have this banking relationship, this really tight banking rapport with Navy Fed, you are benefiting at various levels, not just in terms of having a higher Navy Fed internal score, but also you can get access to better credit products. You can get better rates on personal loans. You can get higher limits on credit cards. You can get higher limits on revolving lines of credit. So it is a win-win situation for you and for Navy Fed. Thank you so much for your attention. In today's conversation, I was just talking to you about Navy Federal internal score, their latest hacks that are just making, they're just boosting people's scores like crazy. So I spoke about your credit mix, your CUR, your credit utilization ratio, your inquiries, your credit age, your recent accounts, your debt to income ratio, and your net worth. Thank you so much for your attention. God bless you. I will see you next time. But until then, remember, stay marvelous.